Hi, McDonald's is one of the most iconic brands in the world. It's a massive, massive company. We all love McDonald's. Okay. So, McDonald's has over 40,000 restaurants. It's in more than 100 countries and it serves approximately 68 million customers on a daily basis. It's iconic, it's popular, it's massive, and I've always wondered, how is McDonald's doing financially? Yeah, this is rough. Okay. While discussing McDonald's financials, we are going to be talking about several parameters. First is scale. Second is how diversified is the revenue. Third is the revenue itself. Then net profits. Then balance sheet health. Then free cash flow. And last, the future outlook. So let's start. First, scale. As we can see, this is countries by amount of McDonald's locations, and we can see McDonald's is international. It's in the US, it's in China, it's in Australia. We can't see it here, but it's also in New Zealand, it's in UK, India. It's not in most of Africa for some reason. Now, next metric to see the scale is this. When we are seeing the largest food chains by global store count, McDonald's comes second. The first is, of course, the GOAT, McSway ice creams and tea, followed by McDonald's with 41,822 stores. Starbucks is marginally behind, and then comes the other brands like Subway, KFC. I have no idea who Lukin Coffee is. Oh, look at that, Papa John's. Next, ranking countries with the most McDonald's. The data is a bit outdated, but the gist is that the largest number is in the US, around 36%, with 14,146 locations, followed by Japan, then China catching up quickly. France is fourth, and I expected UK to be a bit higher for some reason, but okay. So US has the largest number of locations, and it reflects in the revenue because, where is it? Yes. Now this is the revenues by segment, geographical segments. 41% consistently is coming from the US. And now, if you're wondering what are international operated markets and international developmental license markets and corporate, they have grouped different nations into these segments. But the gist is 41% coming from US and then rest of the world remaining 59%. Okay. And moving on, we are going to discuss revenue. But before we see revenue, let's talk about how McDonald's actually makes money. This is their business model. Now, McDonald's only operates 5% of their stores, around 5%. The remaining 95% are franchised. So McDonald's has the brand and the store is operated by the franchisee. I hope that's correct. So more chance you're going to a McDonald's restaurant, it's not operated by McDonald's. The McDonald's makes a lot of its money from rent, royalties. Royalties like franchise fees, royalties as a percentage of the revenue of the total amount of sales by a franchise store. We can see here 50% of restaurants have a conventional license. Here, McDonald's owns the building, they own the real estate, and in return, they get the rent and royalties. 20% of restaurants, they only get the royalties, but they have to do no investment. The gray part here, you can see the gray in the rectangle, that's franchisee, and the yellow is McDonald's, because McDonald's, of course. In 25% of restaurants, which are foreign affiliated, they only get royalties and they have to put no investment. So McDonald's is just utilizing its brand name, its brand value, and it's getting a lot of, free money from rent, royalties, and equity in earnings. So how is revenue doing? Now, this is McDonald's revenue from 2005 to 2023. And in first glance, it's not looking too good. It seems to have peaked in 2013 and has been declining since 2020 till 2020. And from 2020 to 2023, 2025 actually, has been on upward trajectory. But still, it peaked in 2013. So is the situation bad? Is McDonald's declining? Not entirely. Because the next thing you will look at, profits. We can see here on the right hand side, the right y-axis, you can see its total net profits, it's rising. So even with declining or stagnant revenue, net profits are rising. Gross margins have experienced a massive rise, and net margins increased from 17.3% in 2014 to 33% in 2023. So 2 years behind, but the gist is it's way more profitable. So McDonald's is now way more profitable than before, way more efficient than before. How? Now, if you want to see some more numbers, this is their net profits. You can see the absolute numbers. In 2022, 6.1 billion, 2021, 7.5 billion, billions of dollars in net profits. So the revenue has declined, profitability has increased. Efficiency, if you want to count that with profitability, we can say efficiency has also increased. So why? How? How has profitability increased? This is the reason. Now, as it is said earlier, only 5% of restaurants of McDonald's it actually operates. And we can see this. The number of restaurants which are operated by the company continuously decreased as the number of total restaurants has increased. We can see this like here. The revenue contribution from its own operated restaurants has decreased. The total amount of revenue coming from the company's own operated restaurants have also decreased. So it's relying less and less on its own operations and more on its franchise. And this is very important because the margins, the operating margins for McDonald's coming from its franchise restaurants is almost 90% compared to a measly 13 to 14%. Why? Because again, McDonald's doesn't have to operate. It doesn't have to care about the operating costs. It receives rent, it receives royalties, which is almost like free money. That's almost pure profit. It doesn't have to do much, it doesn't have to bear much expenditure for franchise restaurants because franchise restaurants will take care of themselves. We can see this here. Franchise restaurant margins 90% for McDonald's, not for the franchise, but for McDonald's. And when it operates its own stores, it's like 10, it's 14%. And we can see here the shift to even a more heavy franchise strategy. 95% of its all restaurants are franchised, a sharp increase from 84% in 2016. One fun fact that McDonald's doesn't include the sales of its franchise restaurants in as its own revenue. So the total franchised revenues, sales have reached $100 billion. It reached $119.75 billion. These are the franchise restaurant sales. McDonald's won't count that. McDonald's will only count the royalties that they get, the franchise fees that they get. That's the only thing. So, how is the revenue doing? It's all right, but McDonald's is now way more profitable than before. The margins have improved much better. The margins are much better. Profitability has increased massively. Next, the balance sheet health. How is how is their balance sheet? So, first of all, the data is 4 years outdated, but the gist is the EBIT upon IE. Now, EBIT is earnings before interest and taxes. IE is interest expense. So, how much interest you have to pay every year is IE. And it's as of 2021, it's 6.5. It's on a declining trend. But still, 6.5 is safe. It's very safe. Interest coverage ratio or EBIT upon IE, anything over 2 is considered good. In McDonald's case, 6.5, very healthy, but this is like 4 years old. So going even more recent, as of 2024, we can see total debt, $38 billion. That's a lot of debt. Fun fact, McDonald's valuation is 200 billion. So compared to that seems low. Um, Debt upon EBITDA is 2.7 on the lower side, and the lower it is, it's better. So it seems that the debt situation already fine, it's getting better. It's less of an issue. We can see Moody's and S&P both have given it a triple B plus rating by S&P and a Baa1 rating by Moody's, which means it's a good investment. Good investment rating. The ratings says that it's a good investment, not me, the ratings. So on the debt situation, total debt, it's not increasing massively. Debt to EBITDA on the lower side, very comfortable interest coverage ratio. So its interest payments don't seem to be an issue. This is their balance sheet as of December 1st, 2024. We can see cash and cash equivalents, $1 billion. Now you can see here the total current assets, 4.5 billion, total current liabilities, 3.8 billion. You divide current assets by current liabilities, it's still over one. And this is known as the current ratio. And the current ratio over one seems to be good. Below one can be concerning, dependent on the industry. But here we can see cash and cash equivalents, $1 billion. If we see in its short-term borrowings, completely gone somehow. Accounts payable is 1 billion, lease liabilities, $600 million. Total current liabilities, 3.8 billion. If you see its assets, property and equipment, it's currently around 44 billion, but if you divide the depreciation amortization, it's coming around 25 billion. Moving on to total liabilities, we saw that earlier, $38 billion. It's more than the assets, but it's kind of always been more than the assets. McDonald's has more debt than it actually has assets. Is it unique? It's kind of unique in that aspect. Now we can see here total shareholders' equity is negative. Yeah. If you're wondering what is common stock in treasury, this massive number, $77 billion. Common stock in treasury is basically the stock, the company stock, which McDonald's itself has bought back in share buybacks. So McDonald's has bought back a lot of its shares. So the debt situation, in a summary, it seems that it has debt, but it's not really an issue. It can cover its interest payments really easily. And it seems that the debt will become less and less of an issue as time goes on. The trend seems like. Next, we have free cash flow. You can see here. Now, if you're wondering what this is free cash flow of the company from 2009 to 2025. You can see 4 billion, 4.9 billion, 4.3 billion. It's also on an upward trajectory, reaching 7 billion, 7.3 billion, 6.7 billion in 2025. So the free cash flow is on the rise, which is a very good thing. You can see here free cash flow 6.6 billion in 2024. It fluctuates, it goes up, it goes down, but the overall trend is rising, which is a very good thing. We can see the free cash flow conversion, which means what percentage of profits are converted into free cash flow. It's declining. It has declined from the peak of 97% to now 81%, but McDonald's is aiming for that to go up to 90%. We will see that in the future outlooks section. Moving on, we're going to compare the free cash flow to their overall market cap. Here it is. Oh, sorry, this is a change. This is a change. You can see it fluctuates, but again, it's mostly on upward rise. This is the free cash flow yield, which is basically You divide the free cash flow by the market cap, and McDonald's seems to be in that 3% range. It's currently around 3.2% as of December 1st, 2024. So, a CFE of 3.2% for a massive company is actually pretty good. It seems pretty good. And free cash flow is growing. So, on the free cash flow front, we can say that the FCF yield, not the best, is still 3.2. It's growing, not the fastest. It goes up and down, it fluctuates, but it's on a nice upward trajectory. So on the free cash flow front, it's doing pretty good, except for the free cash flow conversion rate. So I guess that's it. That's the video. We are going to talking about the future outlook now. Before that, one more stat to show. Same store sales growth. Now this metric is very important for any companies having a lot of stores. Same store sales growth. What sales growth is being experienced by these stores? So once a store has been established, how much growth is it seeing in its sales? And when I'm finding these numbers, they seem to be a different. One chart says something, one chart says something else, but the gist seems to be that before COVID, it's growing at a comfortably nice pace. In COVID, massive decline, but after COVID, it had a resurgence. See a more detailed chart. You can see here post COVID, 12% growth, 11% growth, double digit same store sales growth, which is very good. But in the most recent quarter, it did have a 1% decline. And declines happen. Who knows what will happen? But it seems that generally speaking, the same source sales growth has been a very big positive for McDonald's. Next thing to see, what is this? Oh, yes, McDonald's in the past few years have increased their net restaurant unit growth. So they are opening more and more and more restaurants. A lot in the developed markets. We can see 4% growth in 2024, 3.8% growth 2023, 2.7% growth in 2022. 2022 excludes whatever happened in Russia. Fair enough. We can see the growth rate. It's opening more and more restaurants at a faster pace. And this is surprising. CapEx, it's having higher and higher. It's spending more on capital expenditure. It's investing more into the business, but a lower percentage of it is going into reinvestment, and higher percentage is going into opening new and new units. This average revenue per store also increasing, reached about $4 million in 2024. I believe this is worldwide. And looking into the future outlook, McDonald's is planning to open 50,000 stores by 2027. Of course, more and more of it will be franchised or foreign affiliated. Foreign affiliated, I guess, means other company will open franchise stores for them or have a chain of franchise stores for them. I think that's wrong. I don't know. Last long-term outlook, again, trying to open 50,000 units by 2027. Trying to increase their free cash flow conversion rate to 90%. They will they're focusing on expanding their margins, focusing on increasing capital expenditure, focusing on basically improving everything. So yeah, I guess that's it. So in a summary, what's going on? Revenue took a dip, but that's understandable because it shifted its business model to be even more franchised than it previously was. So it's now more and more franchise heavy. It's looking to expand more and more into international markets. Net profits have done very well. Profit margins have done very well. The company's investing more. Its balance sheet seems to be healthy. It has a lot of reserves. If you want to go back to their this retained earnings, you see this retained earnings section? I hope you can. Let me make myself smaller. Retained earnings. You can treat them as reserves or money set aside for specific purposes. 66 billion, very healthy. It's like almost twice of debt. Its interest doesn't seem to be a problem for it. Interest as in interest payments. And it seems to be on track to achieve its expansion plans. Free cash flow is doing well. Yeah, McDonald's, one of the most iconic brands ever, seems to be doing well. That's it. Have a good life.